In today's video, we talk about a lot of things like the good news about AMC, why it will pay dividends, how short sellers are stuck, and a lot more. Let's start by looking at this from Adam Aram. For AMC, this is fantastic news. The announcement made in a press release that was issued today is one of the more significant developments in AMC's multi-year efforts to recover from the devastation caused by CO in 2020. If approved by term loan lenders through a public consent process that is being launched today, we announce today that AMC has inked a collaborative agreement with some of my most important lenders. In essence, it will accomplish all of this. We will provide a succinct summary of Adam Aram's explanation, and we will undoubtedly go into additional detail regarding this. In essence, we can see that it will result in a more than $220 million increase in our company's treasury. It will now convert $143 million of debt into equity following the conclusion of litigation brought by some of our holders regarding a 7.5% senior secured note. This number could eventually rise to $337 million. The balance sheet as a whole is simply strengthened by this. And this is where we are at the moment. Also, this is based on what we talked about yesterday. We have talked about how AMC has put itself in a dangerous position. In addition, when compared to shorts, the contrast is easy to see. AMC clearly manages to reduce its debt by increasing revenue, as can be seen. Conversely, all of these institutions are experiencing a decline in revenue and profit, but in the process, their debt and loan balances are growing. Based solely on that video, we saw that AMC recently announced plans to restructure additional debt, which naturally means that they will further improve their financial situation. We talked about how much AMC will save each time they pay off debt or when we see a rate cut. And this is just one more way we are releasing funds for AMC. Continue reading for a more in-depth look at the reasons why this is unquestionably excellent. As can be seen, AMC is generating the new capital of $223 million that we discussed. Naturally, the new money from note holders is being used to refinance future maturities and increase liquidity. 825 million new bonds were exchanged for 590 million older ones, reducing interest costs and demonstrating investor confidence. The conversion of over 143 million in debt to stock. Longer term and more flexible, please. No mirrors. This is a deliberate refinancing. So why is it important? The confidence in credit is high. This is not a rescue. It's a vote of confidence from people who are aware that AMC has the best appearance. The legal hoops have been cleared. That the lawsuit against the 7.5% bondholder was settled as part of this agreement. As a result, breathing space. Given how strongly the box office is recovering, AMC now has more financial flexibility. Thus, you can see why this is obviously very good news for us and why, as I mentioned earlier, AMC has put itself in a very strong position. First of all, one of the most important things to take away from this is that we just discussed their willingness to convert the debt into stock. You can also ask this to yourself. Give it some thought. Creditors assumed debt in exchange for equity and possibly additional future shares due to their perception of AMC's high value. They will earn more money from that share than they would from just the principal and interest. Extremely optimistic about taking shares for debt and extending 2026 debt. First, what exactly does it mean? When they take in AMC shares as debt, what does that indicate? This, of course, is confidence. Whether or not AMC will go bankrupt and whether or not it is worthwhile to purchase its shares is one of the most frequently discussed topics. You see these news stories every day, you know. However, the fact of the matter is that each of these significant financial institutions and investors is prepared to acquire an AMC. All of them desire to own AMC stock. As we discussed, the Eli liquidity has caused AMC's flow to be already absorbed. So, it is clear that whenever you purchase shares, you are essentially compelling short sellers to produce synthetics because they want AMC shares. Because they are aware of the Eli liquidity and institutions we are witnessing, large wealthy institutions are willing to do this. They are aware of the value of AMC's stock. They are willing to take this again because they are aware that it will earn them more money than the principal and interest all at once. As a result, you already know how they see AMC evolving in the future. However, we also talked about the high level of confidence among creditors. One of the main topics we discussed was AMC's dividends. Additionally, the debt has historically been a factor that has prevented AMC dividends. These notes are to blame. We are currently in a position where creditors have faith in AMC. They are aware that AMC is likely to pay off the debt. They might be open to converting even more debt into stocks in the future. That is to say, we are simply paying off the debt more quickly and employ a novel strategy that is superior. And once all of these are finished, you can observe that AMC has placed itself in the best possible positions and is debt-free. And once more, that needs to be done with all of the factors we discussed, particularly with regard to these debts and creditors. As you can see, AMC will generate a sizable profit, but they will also have a healthy cash flow that will allow them to begin paying dividends. And for that reason, I believe this is crucial since it goes beyond how AMC will perform going forward. However, these minor hints that are currently available highlight AMC's potential future. AMC can invest in any project that will be completed in 6 months, a year, or 2 years into the future. We can tell that shorts are obviously panicking at the moment because of this. Many of us have taken advantage of well-realized opportunities and are investing in AMC, and biotech moves are evident. Unable to resist taking in Adam's encouraging information. Recently, I added 250 AMC shares to my holdings. We also said that this isn't the only person who buys AMC. AMC isn't just purchased by this ape. Every day an infinite number of people purchase shares of AMC. Returning to our previous discussion, each time we purchase a share, we are compel institutions to produce synthetics. Each time we force them to produce synthetics, the floor price will only increase. And for that reason, we recognize that we are in a very favorable position at the moment. AMC also clearly has a singular focus. We believe AMC is doing the same at a time when the movie industry is starting to hit its stride, backed by an increasingly stronger balance sheet and the confidence of our financial partners, concluded Adam Aram. We are steadfastly committed to making audacious decisions that, in our opinion, will increase long-term shareholder value. Naturally, there are a lot of different things to consider here. First, we're discussing the clearly positive state of the film industry, followed by a steadily improving balance sheet. The most crucial element is this. Once more, there are numerous aspects to consider when discussing the squeeze. One of the most crucial things is, of course, that AMC avoids bankruptcy and continues to draw in new investors. American Motors Corporation in terms of dividend payments. Now, none of this is possible if there isn't a strong balance sheet. You're losing money, making less money, and your operating expenses are rising according to your balance sheet. AMCO mind that won't demonstrate that AMC won't go bankrupt, will it? In actuality though, AMC is doing incredibly well. We will see that AMC's balance sheet is becoming stronger and stronger and that once they are able to pay off their debt, they will be able to pay dividends. This is what we are witnessing in terms of taking decisive action so that you can see and comprehend how well AMC has done. As you can see, John Hampton and Braun Capital are still short and stuck in AMC. This haughty short seller's future is not going to be bright. He is eagerly awaited by the wall of shame. This is John Hampton, whom we have previously discussed, as you can see. Again, I won't go into too much detail about him, but just know that he is unquestionably a short seller for AMC. Feel free to check it out if you guys want to understand him better. However, as you can see, I would like to thank the other AMC shorts for their helpful participation in the final attack this morning. When good news like this one comes out, we all need to do our part to